Hey there, everybody. Thomas with Basecamp Trading. It is Wednesday, February 26th, and we're going to take a look here at the indices and talk a little bit about what's happened the past few days, some of the crazy volatility that we've had and some of the trades that we've had that have played out really well. But first off, one thing I want to point out here, volatility has skyrocketed in everything, right? Because of fears from the coronavirus, COVID-19, COVID-19. So one mistake a lot of traders make, and I see this happen with retail traders especially, is volatility like this spikes. They get that fear of missing out. They get that fear of, oh my goodness, look at all the money I could be making right now. And they start forcing trades and over trading. Do not make that mistake, because what most traders end up doing, they see the money that they could theoretically be making. They start jumping in and trading all over the place, and they end up coming out the other end of the volatility with a whole lot less money than they started. Okay, so don't make that mistake. Be patient, pick your trades, pick your setups, make sure you're getting in the right trades at the right times, and following the rules of your trading plan. Okay, so with that being said, let's talk about a couple different trade setups from today. We'll talk about why we had a bearish bias this week in the markets. So first off, Russell here was one of the ones we had right at the end of the futures trading room, or my part of the futures trading room, the morning session. And that was a pennant pattern in the Russell, and we had this bearish divergence. We ended up coming down, breaking out of the pennant pattern in the Russell, accelerating down. This is on a 5-minute price chart. Then you formed a 30-minute bear flag and dropped again to the downside. Now we're starting to retrace back up. So that played out really well. Nice job for everybody that took that. Now, if you were in the trading room with us, we actually had several really good trades: shorting gold, shorting silver, going long indices, and going long crude oil. And let's talk about what those were as well, because the longs that we had, we weren't trading the Russell because the Russell was the weakest. Remember, if we're going to be trading going long, we want to trade the strongest of the indices. So we were looking at trading the S&P, Dow, and the NASDAQ. And if you look here, we had a very well-defined uptrend climbing, okay? In the NASDAQ, here's the S&P, very well-defined, higher highs, higher lows, uptrend as well. We had the initial breakout this morning on the break through the pivot high resistance to the upside here. Then we had a buy again right here on the S&P, NASDAQ, and Dow based on these 5-minute hammers. So we said, okay, our market's trending higher. We're retracing back down. We get a hammer that says the end of the retracement should be right here. We traded long as soon as we break above the high of the last price bar, the last two price bars. That got you in here for the nice run up there. And then we ended up having a shooting star at the top. We pull back, and then we put in this lower high here, coming off this bearish divergence, and what we call a one green finger, which pay attention to that, because we're going to talk about that here again in just a second. That one green finger means bearishness. It's when we go from red histogram to green histogram and right back to red on the MQ momentum here. We rolled over. We ended up forming what's called a trend reversal breakout, and breaks to the downside that had you on the short side on this move down we had in the afternoon. Now, with that being said, full disclosure, I'm currently long the NASDAQ right now, up about $700 a contract. I bought it down here based on the same exact setup, but in the opposite direction. This one red finger here, and so far it's playing out pretty good. This is the S&P, but again, I'm on the NASDAQ. With that being said, one of the reasons we were bearish the past 2 days and all week, if you were in the webinar I did on Friday, you heard me talk, or on Saturday, excuse me, you heard me talk about being bearish indices and how I was actually short the NASDAQ on Saturday. I was short from Friday and held it over the weekend, which played out really well. Now, that being said, I went ahead, I covered it after the open when we gapped down. But then we had shorts in the Dow that we held all week until today, and those played out really well. But that being said, this is why we were bearish the indices this week. Same exact setup, that one red finger or one green finger. You can see here, except this is on a weekly price chart. So we had a bearish divergence on the weeklies, where we had higher high prices, lower high indicator lines, lower high histograms, and then right here, we also had that one green finger set up once again. That ended up triggering when we closed down last week and closed with that red histogram bar, and then boom, through the floor we went all this week, blowing right through the support levels. So played out really well. I was expecting the indices to be up a little bit today. It's about 3:15 in the afternoon. We're not quite up, but we did stall. We didn't expect more downside today as a whole. So playing out decently. I wouldn't be surprised at all tomorrow to see a bounce, and then potentially Friday drop again. Do not believe that the down move is over here, especially because we have the shooting star on the monthlies now. So I think we still have more downside to go in the coming weeks. But that being said, right now, like I said, day trade, I'm long. I expect to bounce again tomorrow, or at least a consolidation day tomorrow, and then another leg down potentially on Friday or early next week. But overall, played out really well. Big point here is make sure you're still patient. There's plenty of opportunities to trade. Don't be in a hurry to jump in just because you see markets moving up and down. All right, don't fall into that trap of, oh goodness, I can be making so much money, because more often than not, traders end up losing a lot of money when they're impatient and they start forcing positions. So be patient, wait for the right trades, let the trades come to you, follow your rules, don't break them. And worst case scenario, all right, you sit out during this period of volatility if you don't have a large enough account to use the stops that you need to be using, and you wait for the next one. There's always going to be another opportunity to trade the markets. There's always going to be more volatility in the future. Okay, but that's it for today. Don't forget to like and subscribe if you're enjoying this video. And until next time, everybody, happy trading.